Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this Friday morning. Asian markets start mixed as trade talks between the US and China make little progress. The dollar gained ahead of an address from Fed Chair Jerome Powell. Hexaware's promoters look to raise 1,120 crore rupees via a QIP. The floor price of 447.5 per share is a 10% discount to the current market price. Lenders of India's largest edible oil maker, Ruchi Soya, have approved Adani Wilmar's bid for taking over the insolvent company. And CLSA voices concerns over Colgate's latest acquisition, questions why the deal is being routed through an unlisted associate company. And in a major upset at the Asian Games, the Indian men's Kabaddi team failed to reach the final for the first time ever. On the other hand, 15-year-old Shardul Vihan won a silver medal in the men's double trap shooting event. Here's a look at the US markets and how they panned out. Stocks fell in the US on Thursday, hurt by declines in commodity-related companies as the new trade tariffs came into effect in the US-China trade war. Remember, the last round was $16 billion worth of goods on either side. Although gains in technology shares limited the losses overall for those indices. Abigail Doolittle of Bloomberg News wraps up all the Wall Street action in this report.
Stocks declined in Thursday's Wall Street session. Both the Dow and the S&P 500 down for a second day in a row. The Nasdaq, that tech-heavy index, snapping a 5-day winning streak. At the end of the day, though, the declines for the major averages relatively small. The Dow was down about 0.3%. The S&P 500 fell less than 0.2%, while the Nasdaq's drop was a little more than 0.1%. All of this on a lack of news. Traders and investors seem to be in a wait-and-see mode. It is, of course, the end of summer, the dog days of summer, so not a lot of activity on that part as well, despite the fact that there was a small renewal of the trade war between the U.S. and China. Now, there were a few earnings movers that really stood out, a tale of two cities in retail, in fact. L Brands down 13% after the company did cut its full-year earnings view once again, a second time this year. The owner of Victoria's Secret and Bath & Body Works saw more weakness, and the Pink brand that had been a bright spot now struggling as well. As for a big winner on the day, Williams-Sonoma, ticker WSM, those shares up 16.7%, the best day since 2009. There's a high bearish short interest there, though, so some of it could be a short squeeze, but nonetheless, they saw growth for all three labels, units, including West Elm, Pottery Barn, and the namesake brand. As for the sector composition, 10 of the 11 S&P 500 sectors lower, one higher. That was tech, up just slightly, boosted by two of the big tech names, including Apple and Microsoft, while there was some outsized strength for some of the chip performers, including AMD up more than 6%, as a Wall Street firm set a street high price target of $30 per share, and NVIDIA going along for the ride, up 1.2%. But overall, with stocks declining on the day and Haven bonds about flat, the yen down, there wasn't really a true risk appetite to the session, more of a neutral risk appetite to Thursday's Wall Street session. In New York, Abigail Doolittle, Bloomberg News.
Now, if you've been paying attention to the news that's been emerging from the U.S. over the past few days, you won't be surprised by this statement by President Donald Trump. He said that he doesn't see a reason for Congress to impeach him, but that the stock market would plummet and Americans would be poorer if lawmakers did so. Take a look.
If I ever got impeached, I think the market would crash. I think everybody would be very poor, because without this thinking, you would see numbers that you wouldn't believe in reverse.
All right. Well, on that note, let's go straight to Bloomberg's David Inglis, who's joining us from the Hong Kong studio with all the live market action in Asia. Well, David, that last clip that played out perhaps has nothing to do with the markets, even though Trump says that the markets would crash if he would be impeached. I think the latest update would be the conversation between China and...
Absolutely not.
Yeah, so China and U.S. Trade talks, right?
Right. So I'm just going to pretend you didn't tell me that, and I'm just going to pretend and just brush that off and just overlook it. I mean, okay, you know what? Okay, just to chime in, maybe the Trump trade might be a threat, and you put that together. I guess when you do a weighted basket of the S&P, you look at where the 10-year yield is and where the dollar is, and certainly since he was elected, there's no question objectively that that's gone up. Whether that's a function of him being the president, partly a function of the tax reform that he's put in place, that's correct. But is that all sort of at risk if he's forced from office? I'm guessing you'd be hard-pressed to find any analyst would probably tell you that is 100% objectively true. Let's put it that way. Right. Now, staying on politics here, and I'll talk about the Chinese trade issue in just a moment, because we did get some good news on that front about 30 minutes back. But let me just mention some of these lines coming out of Australia here, because that's the other big story we're tracking here in the Asia Pacific. So this just continuing drama really there on the political side. So Malcolm Turnbull has now said, and this is coming through in fact here, that he has been provided with a petition for the meeting. The petition has 43 signatures, he says, and once those signatures are essentially verified, he says, then they can proceed. Then I would imagine that, proceed for a vote in a meeting. So essentially what that means is that in a couple of hours, we could see a completely different makeup there of the leadership in Australia. Of course, he has been challenged, or his leadership has been challenged this week. Earlier on this week, he narrowly escaped, of course, by a very thin margin, and this one seems to have a lot more meat in that, which is why when you look at assets over in Australia, implied vol is on the way up. In other words, markets are bracing or hedging for I guess, wilder swings or bigger swings in the currency. Now, that takes me to the other big story, which, when you look at the Aussie dollar at this point, and broadly risk assets in general right now, is this comment coming out of these mid-level talks in Washington between U.S. and Chinese officials, and essentially to the effect that the talks have been constructive. And when that comment came out, the Aussie dollar got caught a bit. And essentially, we saw a synchronized bid across most risk assets. Not a massive move, but it's certainly noticeable when you compare, I guess, the texture of markets before and after the comment came out. So essentially, I spent about 2 minutes there telling you that it's a good day so far across markets in the Asia Pacific. If this does, of course, hold, and of course, the developing story is still Australia, which could change the complexion of markets there, depending on how this really plays out. Back to you.
All right. Well, thanks so much for that, David. Let's head over to news from back home. And in fact, let's talk about the trade setup for the day in India and all that's happening in the futures and options space. To tell you all about that and more, here's Darshan Mehta. Good morning, Darshan. Well, seemingly, David says that positive cues as of now coming in from overseas. How's it looking in India?
Yeah, so that's there, but I'm really surprised that the SGX Nifty is indicating a negative outlook. It's down 40 points at this point of time. So that's something that we need to watch out. Still, there's time for us, the market, to actually start. But nevertheless, the SGX Nifty is down almost 40 points in today's trade. As far as the ADRs are concerned, let's see how they panned out in trade. There was selling pressure all across. Tata Motors, Vedanta, HDFC Bank, and ICICI Bank, all of them were down in trade in the US markets. The only exception was Dr. Reddy's, which was up 0.5% in trade. How did we pan out in trade yesterday? It was rather flat in trade. Nifty was actually flat in trade. There was selling pressure that was seen on the mid cap and small cap end of the market. Let's see how the bank Nifty managed to pull up. It was down almost 0.8%, and the Nifty PSU bank seeing heavy selling pressure. It was down over 1% in trade. Which were the sectors that saw a little bit of traction? IT and FMCG seem to be seeing a lot of traction. The way rupee is moving, there is money flowing into IT. FMCG as a pack is doing well, despite where the rupee is stating out to be. Now, FIs have bought in almost 430 crores in the cash market. DIs bought in 140 crores. But overall, FIs this month have been net sellers. DIs have been net buyers as far as this entire month is concerned. Basically, if you're looking at how the Nifty panned out in trade, the Nifty was up 11 points. Reliance was the only contributor, almost 20 points of it. It touched a market cap of 8 lakh crores. L&T, because of the buyback, saw a lot of traction, and because of how the rupees panned out in trade, there is buying that's seen in the IT counters. Very surprisingly, HDFC Bank and Kotak Bank, both of them are bleeding, and joining them is SBI. So banks as a pack didn't do well in trade. Now, if you're looking at how the F&O market is set up at this point of time, there was fresh buying that was seen on the Nifty. Open interest build-up was up 0.3%. Let's take a look at the Nifty Bank, and you can come to know that there was long unwinding that was seen on the index. Open interest was down almost 14% in trade. Now, how are we set up as far as the open interest distribution is concerned? 10,500 continues continues to be the big support for the market. There is resistance that's coming in at the 11,600 to higher levels that is there. But yesterday in market, the market was rather flat in trade. So let's find out where the distribution did happen. Still, put writers were much more active at 11,500, and they even wrote aggressively on the 11,600 mark in trade. Call writers wrote in a little bit at the 11,000 level. So despite a 40-point downtick on the SGX Nifty, it seems that the momentum still seems with the bulls at this point of time. Couple of stocks that you need to watch out for. Jain Irrigation and Raymond are in the F&O ban. The other counters that these are the only two counters. The Nifty PCR managed to stay pretty much at the same level, 1.72 versus 1.70. Bank Nifty PCR came off as there was selling pressure that was there. Couple of stocks that I want to highlight here. First of all, Marico trading at record highs, open interest build up of 6% on the long side. The next counter is Exide, again open interest build up of 10%, that too on the long side. Exide and Amara Raja have been doing well of late. And finally, Mahanagar Gas yesterday saw fresh shorts. Open interest build up was 200% because of the big block deal that happened. The counter pretty much ended close to day's low. Despite the block deal happening, selling pressure did manage to continue on Mahanagar Gas.
All right, thanks so much for that, Darshan. Well, that's the trade setup for the day, and that's what you have to look forward to. Now, there's a comment coming in from former RBI Governor Raghuram Rajan. He says the trade conflict between the US and many of its economic partners can hamper global growth. Speaking to Kathleen Hayes at the Federal Reserve's annual symposium in Jackson Hole, he said he sees emerging markets as a global risk. Here's a small slice of that conversation.
I think we're all very well aware that two things have built up, which had built up before the previous crisis: leverage and asset prices. And both are at pretty high levels. I mean, we thought that after the crisis of 2008, we'd bring down leverage. We haven't. It's moved from some balance sheets to other balance sheets, but overall it's increased. And then asset prices. I mean, we just had a record for the S&P 500 just the other day. So I guess the concern is that, yes, things have been reasonable so far over the last couple of years. Growth has been strong. But how long can it go on? And does it fit with the kind of prices we have and the kind of leverage we have?
Well, you know, 2.5 months ago, you warned about the risk of a kind of toxic mix, rising rates and some, quote, untoward action on trade. The Federal Reserve is on track, it seems, for 2 more rate hikes, September and December. The U.S. and China continue to barrel down this tit-for-tat path on tariffs and more. Are you raising a red flag yet, Raghu?
Well, I think the underlying conditions are fragile. And that's why I raised the issue of leverage and asset prices. Now, you hope growth carries us forward. But of course, trade, actions on trade on either side would be a very strong headwind to that growth. And that would be a source of big concern. But also, we've seen some of the emerging markets are highly levered. Some of them have elections, you know, Brazil, for example. And a lot depends on what the new administration then decides to do. We've seen Turkey, we've seen Argentina. What more is there? Now, my sense is it's not a systemic issue yet amongst the emerging markets. It will be outliers, but there are outliers. Countries that haven't used these years to get their fiscal in order, to get their current account deficits in order. And of course, commodity prices going up helps one set of countries, commodity prices going down helps another set of countries. So there are vulnerabilities in the system.
That entire interview will be available very shortly on the website, so do check it out. For now, let's take a check on the rupee and the bond market. Saloni Dhanuka is joining us with all the updates there. Saloni, overnight you saw dollar strengthening after quite a bit. What is the effect on the rest of the currencies?
So talking about Indian rupee, Alex, it was tracking losses yesterday as was the case with other emerging market currencies after Fed minutes continue to signal further rate hikes in the current calendar year, and we have seen rupee weakening past the 70 mark, and it ended 0.4% lower at 70.11 levels against the dollar yesterday. That apart, a spike in international crude oil prices also weighed on the home currency yesterday. Elsewhere, RBI RBI Governor Raghuram Rajan told Bloomberg TV in an interview that rupee hasn't depreciated to worrying levels as of now, and he points out that the bigger concern for the world remains of their trade. And well, speaking of the bond market, sovereign bonds declined yesterday as we have seen the 10-year benchmark yield rising 5 basis points to 7.88%, the most in over 6 weeks. Well, on the global front, as you pointed out, dollar snapped its 6-day rally and it ended 0.6% higher, well above the 95.5 mark, and it now trades steady near 95.60 levels. Traders do remain cautious ahead of the Fed chair's speech today, and that apart, if you see, euro and pound both ended over 0.5% lower versus the greenback yesterday. And lastly, speaking of dollar rupee, now it is trading at 70.30 levels in the non-deliverable forward market, which indicates a weak opening for Indian rupee in today's trade, Alex.
All right, thanks so much for that, Saloni. Let's shift over to commodities now. Jayesh Khilnani is here with all the details there. Jayesh, the latest updates in the trade spat between the US and China seem to be weighing on commodities. What's the latest?
That's right, Alex. In fact, let's start off with crude oil prices, which are trading marginally higher. But overnight, if you have a look at the WTI prices, that in fact managed to halt a 5-day gain on the back of strength that we saw in the dollar index, which rallied for the first time in about 7 days. In terms of the inventory data, that was also positive. The US crude oil inventory declined as much as 5.8 million barrels for last week as per EIA report. And also we understand from a JPC report that the global oil demand is likely to recover after the weakness that we saw in the second quarter of this current calendar year. As far as the base metals are concerned, the index itself on London Metal Exchange snapped its 3-day gain. Now copper led the fall, in fact, which on the back of the dollar index, which gained, and the US-China tariffs, which kick in. Now we also understand that copper traders have turned neutral on the back of the trade war concerns, which have in fact dented the demand-supply sentiment. As far as other base metals are concerned, lead was that advanced 3rd day in a row. We had nickel and tin, which fell more than 1% each, and we had aluminium and zinc, which ended flat to positive for themselves. Now if you look at the Shanghai Futures Exchange, most of these base metals are in fact trading with a mixed bias. Last time I checked, zinc was up about 1.5%. As far as precious metals are concerned, we saw some bit of weakness creep in about for gold prices as well. Once again, the major factor that weighed in over here was the dollar index.
Thanks so much for that, Jayesh. Now, after a lengthy delay, the Committee of Creditors for Ruchi Soya approved Adani Wilmar's bid for India's largest edible oil maker. The company outbid Patanjali, who emerged the second largest bidder. Vishwanath Nair, who broke that story, is joining us on the phone line with more details. Good morning, Vishwanath. What is the details of that bid, that winning bid, and what are the latest updates that you have with regard to this company?
Good morning, Alex. So what we understand from our sources in the banking industry, as well as some lawyers who are involved in this case, is that Adani Wilmar is offering about 4,300 crore to the financial creditors of Ruchi Soya. And the financial creditors' claims are over 9,000 crore at this point in time. Adani Wilmar will also infuse about 1,700 crore, a little more than that actually, in the form of equity into Ruchi Soya, so that the company can get back to shape and it can start producing oil again and start selling more product. In comparison, Patanjali's bid was about 4,000 odd crore for the creditors and about 1,700 crore of equity. And this is why Adani's bid sort of won over Patanjali's. Remember that this has been going on, this bidding process has been going on for a while now. In fact, the lenders had conducted a Swiss auction mechanism in this case, wherein Patanjali was given an opportunity to increase its bid and thereby become a challenger to Adani again. But both bidders chose to not increase their bids, and eventually, of course, Adani won the bid finally. Now the case will go to the NCLT for a final nod, after which Adani can then take over Ruchi Soya's businesses.
All right, thanks so much for that update, Vishy. Now, in case any of you want to read this story in detail, it's available, of course, on the website bloombergquint.com, so do check it out. There you have it. Lenders approve Adani Wilmar's bid for Ruchi Soya. All right, on that note, let's turn to Shraddha Babla, who's joining us with the stocks in news. Shraddha, good morning. What are the stocks on your list today?
Good morning, Alex. I'm going to start off with Hexaware Technologies, where the promoters are looking to raise 1,120 crores via share sale. So you could see some block deals in this counter today. So the promoter, which is Bearing PE Asia, is looking to sell 2.5 crore shares, for which the floor price has been fixed at 447.5 per share. That's a good 10% discount to yesterday's closing price. So that is likely to weigh on the stock. Currently, the promoter has about 71.2% stake in the company. That apart, you have Britannia's board, which has approved a stock split of 1:2. So some positive reaction there likely. You also have Indigo, which has confirmed that some of its A320neo aircrafts have been grounded proactively, and the management has cited the shortage of engine spare parts from the manufacturer as a reason. Ramki Infra is said to be in talks to sell 2 road assets for about 3,500 crores, and the proceeds are likely to be used for retiring debt. That's according to a ET report, so watch out for that name. And finally, in a bulk deal yesterday, we did see BG Asia, which sold 14% stake in Mahanagar Gas yesterday. So interesting is the name of the buyer. Small stakes that have been picked up by some of the funds. BlackRock Emerging Frontiers Master Fund has picked up 0.66% stake. L&T Emerging Businesses Fund has acquired about 0.66 stake, and Schroeder International Selection Fund has picked up about 0.5% stake or so. So that's the list of stocks to keep an eye out for.
Thanks so much for that, Shraddha. On to an exclusive interview now. Pawan Goenka of Mahindra & Mahindra sees a strong growth in the tractor business for at least a decade, provided the monsoons stay steady. Speaking to Bloomberg Quint's Neeraj Shah, Goenka said that they will make an effort to improve their already healthy margins. Listen in.
Tractor business, it's very difficult to predict year on year because it depends on so many external factors like monsoon, like MSP, like overall GDP, rural sentiment. And therefore, sitting here today, I cannot tell you what will happen next year. But what we have noticed is that over a 5-7 year period, the growth rate will average out to about 8 to 10%. And our assumption and our calculation says that for a few more years, 7 years, 8 years, that average 8 to 10% should continue. Now, yes, we have been pretty fortunate to get 3 very good years of growth. Logic would say that if you have had 3 good years of growth, perhaps a down cycle is around the corner. But one cannot say for sure it is FY20, maybe FY21, maybe FY22. But 8 to 10% is what we would say over a longer period.
Would you reckon that if the monsoons don't play spoil sport, then irrespective of the base moving up, because of the fact that tractors, even now, despite being so widespread, are under-penetrated as a category, then even with a higher base, that 8 to 10% growth, maybe even higher, could be possible if monsoons stay stable, say, for the next 3 years consecutively?
I would think so. See, one of the reasons we have seen good growth for 3 years is not just because of monsoon. It's also because before that, for about 3 years, there was a negative growth. And therefore, there was a lot of pent-up demand that sort of came through in these 3 years. So I would say that a natural growth that happens, if everything is absolutely normal, would be 8 to 10. And in that, about half happens with replacement demand, and about half happens with new demand. Okay? And that's what India is far from saturation right now. And there are some concerns that get expressed once in a while that when will tractors stop growing? And we think that we have 8 years, 7 years, 9 years of good growth is still in our bag before we start worrying about will we slow down more to the global growth pattern of 3-4% from the India growth pattern of 8 to 10%.
I'm guessing from whatever you're telling me that there are no hurdles to growth unless Mother Nature plays spoil sport. My question would be then, would this growth come at better return ratios, better operational metrics over a 5-year, 6-year period? You have shown that already over the last 3-4 years. Do you envisage that these numbers can move up even higher if the growth rates continue?
See, this question I've been answering for 10 years.
Yeah.
Okay.
What has been the answer?
And the answer has been that we will always try, but we can never guarantee.
Okay.
Okay. The kind of margins that we have today are pretty healthy margins, right? And amongst the best that we have had over a long period of time. Can we do better than that? I don't know. But it will really depend on how the volume grows. Because if the volume grows, margins will more or less grow. Because that means your fixed costs are divided over a much larger volume. It also means that dealer throughput is more, and therefore you don't have to support the dealer too much. So everything starts working. And in this business, or in UV business, or in truck business, or in two-wheeler business, if you sell, everything works.
And you can catch that entire conversation with Pawan Goenka, the Managing Director of Mahindra & Mahindra, today at 10:30 a.m. only on Bloomberg Quint. Now, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. But there are also several stories that you'll find if you log on to the website at this moment. Here they are. ICICI Bank's chairman GC Chaturvedi on a Thursday said that the decision on continuance of Managing Director and CEO Chanda Kochar would be taken after the Justice B.N. Srikrishna panel report is finalized. The panel, remember, is probing allegations with regard to the bank's business deals. The report is likely to be out in 2.5 months. Tata Sons has bought shares of Tata Motors for the third time in the last 14 months as it continues to increase promoter holding in its automotive arm. In all, Tata Sons bought 1.05% stake for about 670 crore rupees on the 13th and 20th of August. It has acquired a total of 2.6% from the open market at an average cost of 255.8 rupees a share. That's all we have for you in this edition of Daybreak, but up next is all you need to know, so do stay tuned. This is Bloomberg Quint.